Welcome, Abhinav. Retired to stock market session 7, December 22nd, 2024. How are you?
I'm great. How are you?
Good. Merry Christmas.
Merry
Coming up.
Christmas.
Happy holidays. Blessings to you and your family.
Thank you, sir. Likewise.
Um, I want to say I appreciate you. I think you're definitely one of my better pupils, if you want to call it that, in the sense that you're taken to these lessons, and I know you're getting it. And we're kind of, I think, advanced. We're covering more principles per session, I think, than most people. So I appreciate you, and think you're doing great.
I really appreciate you taking the time to teach me and answering my questions and putting up with my my attitude sometimes.
Well, you're just a big bundle of energy.
I am. That's
However, when a teacher gives a student an A grade, it doesn't mean they can slack off. You still need to continue
agreed.
your effort. Keep the effort up.
I
Uh,
appreciate you keeping me in check.
and the homework you showed me, the pictures of your notes they look pretty good, and then the writings on the computer look pretty good. I know it sounds like you're getting it.
Yeah.
Which
Um,
is which is the main thing. You're learning. You're going from level 1 to level 2, level 3, level 4.
right.
Um, what you're learning, I think, for me, is specialized knowledge, which is to say that it's not something you learn in school or even a seminar. At least not the way I teach it. You'll hear about cover calls, but you won't hear the philosophy, which is you can pay all your bills monthly and retire in the stock market. What you hear about cover calls is, oh, you're selling the upside, and you're capping yourself for an income. And then they might say something like, oh, but you have all the exposure to the downside. You have all the exposure to the downside, which means you can lose money, you know. And that's kind of what they teach you in school. Stock market, what? It's risky. You can lose money.
Yeah. It's
But they don't.
rigged. It's
It's
gambling.
rigged. It's gambling. But they don't teach you like how to get rich in the stock market, do they? So
No.
that's probably why you can say this is specialized knowledge, because I'm showing you actually on paper how to get your monthly goals, how to get income, how to make money consistently, and if possible, to lower, lessen, or take out all the risk if possible. Because once you get a cash cow position, the majority of all the risk is taken out because you've already achieved 100% return. So what can really happen?
Yeah.
Behind me, we have what? Specialized knowledge. Look at this. Do you know what this is?
What is this for Tesla? What stock is this for?
Yes. You get a star. This is Tesla. This is the option change for 2 years, 2027 Tesla. Why is that important? Most people look at this, they don't know what the hell that is. Some kind of mathematical numbers. You can see the strike in the middle of 550, which is, I guess that's a sweet spot. Because what? Because Tesla was 421 Friday.
Mhm.
Now it broke a new high this last week.
Yeah.
I think it hit 487. I think
Yeah.
so.
Yeah.
That's good, and it came back down to 421, which is still fine because what? Because we're at a profit. We've been in it for a while. We didn't just buy it at the top. You can buy it at the top, but we bought it lower, correct?
Yeah.
And we wrote the farther out call, got some cash back, reinvested that money, and look at that call. Look how it's fluctuating, day to day. You know, you can see yourself trading that call for maybe $1,000 profit, $500 profit here or there. When it dips badly, and then when it swings up, ride it. When it dips, buy it back. You can see the concept.
Right.
I don't want you to just start trading. I want you to just look at it a lot. Like look at it a lot before you trade it, because it's difficult.
Yeah. Yeah.
But regardless if you trade it or not, you're getting a nice cash back on your Tesla for 2 years or 1 year. That's a benefit to you. Yes.
Yep.
That's why I say specialized knowledge because people don't know about it, as you mentioned. So the 550, if I get this mirror right, I know I'm
I
backwards
see it.
from you,
I see it correct. Yeah.
but it looks like you're getting $118 premium on the 550, and the stock is 421 plus the 550 is 130 points. Let's just do the 550 is right in the middle. 130 points of share growth potential. Agree to buy the shares here at 421. Agree to sell the shares at 550 in 2 years. And that's 129 points of share growth. And look at the premium, 118 points. Let's say 120 points. Can we do limit order?
Yeah.
120 points limit order. That's $12,000 coming back to you in hand. Who wouldn't want to buy a Tesla here at 421? Get $12,000 back, 120 points, and still have the opportunity for 100 for 13,000 for 12,900 in potential share growth. Who wouldn't
Yeah.
want to do that?
That's
Would you
pretty
say
good.
that's probably a successful trade?
Yeah.
Now, in review, what's our break even? The stock can come down, right? What's our break even on this trade? Where it's actually a wash. So our share growth loss versus premium.
So 550 is the strike. What's the current price you're looking at? 429? 420?
421. You can pull up Tesla. I was going by Friday's close.
Yeah, let's see real
You can
quick.
you can you can use the cents. Let's use the cents. 421 and change.
Yeah, it's 421.06 on that close. So the break even would be 421. Minus the premium is what are we getting? We said we're gonna get 120, right?
Yeah, 120.
It protects us till 301, right?
Yes, 301. So basically, we don't lose any money until Tesla drops below 300. You see how that's an advantage?
Yeah, of course.
See how taking 12 grand in your hand for a position starting today could be definitely an advantage. Not only are you getting a protection to 130, I'm sorry, to 301 if you want to look at it that way, but you're getting a return up front, and you can still have potential share growth to 550, which is another 129 points. Correct?
Yeah, and if it does start dropping below 420, right, 421, the current price, if it goes towards 350, 320, you could take that 12K and if you're bullish on the stock, start buying it at that lower price again from the money you pulled out of the stock, which is the crazy thing.
You need to trade the cover call.
You might not get the entire 100, but you can start building a position at a lower price again.
Are you saying to trade the cover call, or are you saying to buy shares?
Saying just to buy the shares. You could
Yeah,
definitely trade a covered call. Actually, that 12,000 will be more suitable for doing like a spread or a poor man's covered call or something like that. But
yeah.
it,
On dips, you can always buy the shares on dips. Ideally, massive dips. I think it was down 15 points Friday, so that's kind of good. But in a general sense, it's still way up from the 300s.
right.
But buying back the cover call is you write it for 12,000. Buy back if it can become 11 or 10,000. That would be a $1,000 or $2,000 profit, right?
Close it out, do it again.
And you're closing it out before the 2 years, so you're taking that extra time. You're gaining time because you can close the position early and write it again. You can write it one, two, three, four, 5 times by next year, correct?
Yeah.
But you don't have to do that. You can leave it and then see what happens. I don't want you to overtrade. I don't want you to trade too much or gamble or risk. I want you to be very selective in your trades. I want you to trade with a high percentage accuracy. What's the recommended goal for trading accuracy, wins versus losses in 10?
7 wins to 3 losses.
Right. That to me, that's the kind of the magic number. I can get a little bit higher. I usually do about 9 to 1 when I just do cover calls. So, but SMCI technically could be considered a loss right now still,
Yeah.
but like if you're gonna Well, I will eventually, as long as that stock maintains, I will eventually climb out of that hole. And other stocks have not done that, are just in profit mode. So I get around 9 to 1 on my cover calls. But if I'm doing like trading like options or buying back cover calls or buying those 7 high, it's ideally closer to 7 to 3 if I'm doing it right. Because
Yeah.
you're gonna miss. You're gonna miss sometimes. And that's why I'm going to tell you, you don't have to trade. I don't want you to day trade. That's more difficult. Look at this time decay. Look at these options. Focus on selling the options over buying options. Make sense?
Yep. You're more protected when you do that anyway.
Um, Now let's continue on. Yes, you're more protected. Now look at the left side. We have the puts on the left side. What you can do is sell the naked put, long-term leap. The 550, if you agree to take the stock at 550, you're getting 200 points, $20,000. I want you to think about that.
Sell the five.
You're agreeing to take the stock at 550.
Yeah.
For that, you get $208. Do you understand the concept of that?
So you're getting paid $20,800 to
Take,
agree to
take
buy
the
the shares at 550 when the current price is only 420 something
yes, in 2 years.
in 2 years.
Yes. So in that case, you need the stock to go up, ideally. But you can see the trend on Tesla is doing pretty good, right?
Yeah.
So this is kind of a risky trade. A less risky trade would be to go lower than the share price, because the 550 is actually for the puts, it's in the money. If you go lower, if you sell the 400 strike on the naked put, that's out of the money. That's more common with what we do. On the call
Okay.
side, if just the share price is 421, above 400 is in the money, and I'm sorry, below 400 is in the money, and above 421 is out of the money.
For
But
puts?
it's opposite for the puts.
Yeah, okay. You were talking about the calls. Yeah, for the
Yeah,
put, it's the opposite. For the puts, anything over 430 is in the money.
and that's
Below.
why the puts are paying more above in the higher numbers, because you're technically in the money, and you're going to be taking those shares at a higher price.
Mm,
So let's look at the naked put for a second, okay?
yeah,
If we agree to take the shares at 550, and we are getting paid 208, which is 20,800, is that right?
correct.
Or is it the other one? Am I doing the bid? Is it 214? That's the ask.
I think it'll be 214. Yeah, because if you're no wait, you're
Can we
you're
can we do
you're
210 limit?
you're selling, right? You said so.
We're selling.
Yeah, so then it will be the bid. So it'll be 208.
Can we do 210 limit? I want to improve that.
Okay, so 210.
Okay, so if we agree to sell the shares take the shares at 550, and we're getting 210, what's the break even as far as what the price has to be in 2 years? Because we're gonna buy them at 550 regardless.
Yeah.
So what's the break even if we're getting 210 for that?
Um, break even. I don't know if this is right. I might have done something wrong. So I did 423 minus 210.
No,
You would do plus 210, right?
no. We don't go by the current share price. It doesn't matter because we're not
Oh,
buying them. We're not buying them at the current share price.
all right. So
When you
550.
when you do the naked put, you're agreeing on a future. You're agreeing on a future buy of 550.
So it's
Okay.
550 minus 210.
Yes. And
And
what do
so
you get?
then that's break even is at 340.
So in 2 years, the test is 340. You broke it even on this trade. And if it's below 340, let's say it's 330. That's 10 points below on one contract. 10 points below. How much are you out?
$1,000.
Right. Now, if Tesla's 550, exactly, in 2 years, you have gained what? How much have you gained? Because you're buying it at 550, share price 550. What have you gained?
Nothing.
What about the premium?
Well, the premium, yes, you already got that. You got
How much have
21,000.
you? How much have you get? 20,000. Let's
21,000.
do the ROI. If the stock, and this is why it's difficult because you have to comprehend the stock, whether it's lower, equal, or higher, right? So we're gonna do the scenario is if the stock is 550 in 2 years.
Okay.
What's the ROI?
So if stock is 550 and you got paid 210,
What's the return on investment? You're taking the stock at 550.
I'm getting 2.619.
Let me
So that's
just confirm on my calculator here.
26.19%.
It would be 210 divided by 550.
I did it backwards.
38% return.
So it's your profit divided by share price.
Isn't it though? Because we got a profit of 210,
Yeah, my head was just backwards, but yeah, I
and we're
got
taking the stock at 550, and that's the whole trade. So I see a 38%
yeah,
return.
yeah, I see that. I was-
Sometimes the puts can pay more than the calls, depending on what price you do. Normally like if you want to compare it to the cover calls we write, I'd go much lower because we don't know that Tesla will be 550 in 2 years. Probably will be, but this person's banking. In this
Well, we
case,
did a
you're,
sweet spot mostly, right? For the cover call that in that situation when we're
and
selling.
also for the but the sweet spot for the put is actually lower
Yeah.
than the share price. Does that make sense? Not higher. So we generally write out of the money, not in the money. You know. So like in a sense, if you're going in the money on the calls, that's a rich man's safety trade. If you're going in the money on the puts, that's a risky trade because now you're doing the reverse. If you're going out of the money on the puts, you're doing the standard trade, and that's a lower price, not a higher price, lower than the strike price. So a naked put typically is going to be below 421 because that's out of the money, and we don't want to take the shares necessarily. We want to sell the put and walk away. But if we sell the put for anything above 420, 430, 440, in a general sense, it could easily be assigned. And unless the stock goes up, because we're paying more for it, we could be at a loss of share growth. However, we're getting more money. So I want you to let the naked put marinate in your mind. Naked put versus cover call. What's the difference? Cover call, we buy the shares. We have the shares underlining.
Yeah.
We want them to go up, ideally, or stay the same price. We get the premium, 5%, 10% return, $500, $1,000. You're getting 2,500 on Tesla, yes, monthly.
26.
2,600 monthly, very good. Share growth happens if the stock goes up. Share loss happens if the stock goes down. You match it up with the premium. Ideally, the premium is going to overcome your any share growth loss. And over the course of a year, if you're getting 26 points a month, that's 260 points a year. That's $26,000 a year. Am I right?
Yeah.
So you can just use that as income as buffers, and then you match it up with where the share price went. If it went down 10 or 20%, but you got 100% return on the not 100%, but let's say make 5% a month. It's conceivable you can make 50% a year, right?
Yeah.
I always teach that if the stock does go down 10, 20, 30% over the course of a year, but you got 50% return and on the premiums, you're still pretty good, right?
Yeah.
And the stock maintained and went up, then you've probably gotten your full premium plus even some share growth, which is you're doing great, right? And doing great will happen in a bull market like now, and doing not so great will probably happen in a bear market if we're going down. But even in a bear market, we could outperform the sliding stock by a couple of things, by premiums, but also by going into money like the rich man's. If you really see Tesla on a downtrend, you could sell the lower strike If the stock is 400, you can sell the stock is 420, you can sell at 400, even at 350, like we discussed, getting some some return with protection. Yes.
Yep.
Back to the naked put. Questions.
Yeah, let me just see if I got it right. So for the naked put, you're saying, okay, the current price is, what is it now? 423.
Oh, it went up. See, it went up in after hours. I was just going by the Friday's close. Let's go by the Friday's close because the options stop on the close.
Yeah.
So 421.
Okay. So current price 421 for Tesla. And we're saying we'll sell a 550 a put. For that, they're gonna give us $210 premium, 21,000. And we got 21,000 come end of 2 years. If the stock is below 550, um, we have to buy it, correct? Or no?
Yes, exactly.
If it's higher than 550, then we don't have to buy it.
Yes.
Okay. So we're hoping that the stock's actually gonna shoot up past 550. So we just kept. Oh, I lost you there. I think you're on mute. There
Sorry,
you are.
I was. I'm back with you. Go ahead.
All right, we're back. Okay. So you're selling the 550, stocks at 421, you got 21,000 premium. It's a 2027 leap, so it's 2 years out. So you're getting paid right now to agree to buy it at 550 if the stock price is below 550. Um, and because you got paid 21,000, if you do the 550 strike minus the premium you got, your break even is $340. So if Tesla falls all the way down to 340, you're still good because whatever share loss you had is offset by the premium that you got.
Now there is one benefit that I didn't mention that you didn't mention. Even if the stock goes down to 340 in 2 years, there's one benefit.
Yeah, what's that?
It's on paper you're at a wash, right?
Yeah,
You got handed $20,000 in your hand to invest for 2 years.
today. Yeah,
That's the benefit.
yeah,
What if I told you I'm gonna give you 20,000 and let's see how much you can make in 2 years? And let's just say you put in cover calls, okay? But in 2 years, that money is going to be given back. In other words, washed. It's a wash because you're basing it on another trade, which is a Tesla trade here, and they can put in this case. And the Tesla trade by itself didn't do nothing. You handed money and you handed it back, but you had 2 years to invest it. Do you see the difference now?
yeah.
What would you do with it for getting $28,800? Actually, 21,000 because we decided on 210. $21,000 for 2 years. What would you do with it?
I'd probably do a few things. I'd probably buy like 100 shares
Let's
of.
just say let's just put it in one trade. Just give me an example. Make it simple.
Okay,
Put
so
in
I
one
would.
trade, and what could you do with it?
Well, if we want to stick to Tesla, which we can, if we're gonna only stick to Tesla with that 21, then we can do um a poor man's covered call and get monthly income
There you
additional.
go. There you go. Let's do that. Let's do the Portland store call and tell us how much we can get, and make it kind of safe so you're lower. So it's not gonna. I know it's not gonna spy worthless. Let's just do the monthly
Okay,
with
let's
the
do that.
lower with the lower. You got $20,000, right?
Yeah, so I got 20K here. So let's
Maybe put it in. Maybe say let's decide the number of contracts. How many contracts here should we make?
well, let's do the math on one and then we can always double up, right?
Yes.
Okay, so let's pick the price we're saying was at 421. So I would say I think we probably could go a little lower than 400. So let's pick 390 as our lower call.
And how long do you want to go out on that for?
So let's say we're doing the 390 strike.
You want to go 2 years
Oh,
on that? Make it simple,
yeah, I have
and
a
then sell the
table.
monthly.
Yeah,
So what's 2 years on the 390 call?
2027, 2 years out. Buy. the 390 strike is gonna be costing us 171.75
So 17,000.
is the cost. And we're gonna be, let's say, selling currently where is it at? 420. So looking at 30 points. I'd say let's sell the 460. That looks kind of like the sweet spot.
And what's the 460 pan for January for next month? And use the 33 days because when we do a
Oh
monthly.
shit, that's I did that wrong. Yeah, so sell the 460. I need to change the calendar to monthly. Hold
And
on.
the January, let's do 30. Let's do 33 days. The 24th,
And
I think.
24th.
So I'm gonna do 30 days or close to it monthly.
Yeah, so
I'm
let's
gonna
do
do 10 of those times 10.
so Jan 24th is what we're gonna do, which is 33 days. And if we're looking at what did I say? 460. Now let me redo that. So 25, 5, 10 points. I think yeah, 450 looks good.
Okay, 450. How much is 450 paying?
So 450 strike is paying us the 23.75.
So can we just say in a general sense we're probably gonna get $2,300? Let's just say 20. Can we say limit 24?
Yeah,
To close enough, make it easy. $2,400 a month for 2 years, yes, give or take,
yeah,
on paper. 2,400 times. I'm just gonna do 20 because 24 is like pushing it. Like I know there's gonna be some share growth loss. You might miss your day. You might want to wait for the right time. So we're gonna do 10 cover calls a year and 20 in 2 years. Is that fair?
yeah.
That's more doable than 24, right?
And we can only do one here, right? Like we were thinking originally to buy multiple contracts, but it's kind of expensive to buy that 390 strike at 17,100.
But hang on, but hang on. 17,000, but we're getting back how much on the first month?
21. So we have a little bit left.
But hang on, it's 17,000, but we're getting back how much on the first trade?
Oh, 2,600. So you could do 17 minus 26 as well.
Which is what?
17,
Can we
171.75.
just say 15,000 cost on the first one?
Yeah.
But let's not do that, and I'll tell you why. Because I want to add up all these premiums for profit, right? So we're going to say it costs 17,000, okay? And then to 20,000, can we say we have four more 21,000 because we got 210 points? Can we say we have 4 more thousand to invest?
Yeah.
All right, so we're going to count 20 cover calls on Tesla, getting 2,300, 2,400. Is that fair? Is that doable?
2,400 for 24 months?
No, because that's too much. That's too hard. Remember, how many cover calls do we do a year?
10.
So times 20, right?
Okay.
2,400
24,000.
per year, and how many after 2 years?
Double that, right? So 48.
Did we just make $48,000 on a poor man's cover call in 2 years?
Assuming, yes. Yeah, assuming that you're gonna keep getting the same premium.
But then we got to pay for our $17,000 lower call. How much did that cost us?
We already paid for that from the 21 we got.
Right, but I want to,
Okay, so 48 minus okay,
yeah,
so
because that's technically our cost, right?
48,000.
48 income minus 17,000 our cost. And how much is our total profit?
Let's do 17,100. 30,900 roughly.
Can we just say 31,000? Can we say 31,000?
Yep.
$31,000 from what I'm telling you, it could be a wash trade. Because you took that money, the 20,000 which you borrowed from your own shares, you got 48,000 in $2,400 cover calls on Tesla times 20 times 10 a year, 20 in 2 years, 48,000 profit income, and then subtract the cost of 17,000, 31,000, 17,000 and change, 31,000 total profit, and this could actually be a wash sale, but you're getting 31,000 profit. Do you see how that could work for you?
Why did you say that it could be a wash sale?
Because we initially got the 21,000. How?
By selling a naked put that's 2 years out.
Right. I'm not counting the 21,000 as a profit, even though
Okay.
it probably will be a profit. I'm counting that 21,000. The Tesla shares can go down to 340, and that 2 year trade is a wash sale. It's not a wash sale. Is a wash profit loss. Is a break even, because the Tesla goes down to 340. That 21,000 is eaten up in share growth loss. Correct? Because you have to buy the shares at 550 on the naked put, and then the share price is actually 340. You have a loss of 2,100, 21,000. Correct?
Yeah.
Make sense? I'm not counting the 2 year trade. I'm just counting that we're borrowing the money. And in the case it's a wash, we just have to give it back. Makes sense? So we got 21,000 in our pocket. Okay. But to come forward, fast forward 2 years, Tesla's gone down 21,000 and it's a wash. You follow me?
Yeah.
In this scenario. However, even though it's a wash and we had to, that is a wash trade, we're getting 21,000 in hand, investing it, getting 48,000 minus our costs, getting 31,000 profit. Do you understand?
Yeah.
Now, we're going to keep the 31,000 profit, but if Tesla, and by the way, as long as Tesla stays above 390, we have that 30,000 profit in hand, correct?
Yeah.
Now, furthermore, that 390 that we bought, it could be more valuable because we could be making more than 31,000 because we didn't count the 390 strike. It could be much higher. And we own that 390 call, don't we?
Yeah.
So a Tesla, let's say, is 400 in 2 years. That 390 call that we bought that we spent 17,000 on, which is expensive, sort of. If it's priced 400, how much more money do we get? 10 points or higher. How much more money is that?
Another 1,000.
Yes. So our 31,000 becomes 32,000. But what if Tesla is 550 in 2 years? That 390 call becomes how much value?
That's 16,000 more.
So add 16,000 is 47,000. You follow me?
Yeah.
So now we have 47,000 to come into us in 2 years. And the Tesla trade by itself was a $2,100 profit because we agreed to take the shares at 550. The shares
Yeah.
were 550. That's a break even on the share growth. But the 2,100 we got, which we know is 38% return, is a nice trade overall. So it's 38% return, $2,100 profit. But what do? We took that profit, we invested it, got $47,000. I keep saying 2,100. It's 21,000. We invested, got $47,000 in 2 years. And you're,
However, you will.
and you're good as long as Tesla maintains or goes up.
Yeah.
If it can go down a little bit, we're still good.
However, in 2 years, if Tesla's between or let's say below 550, you then are obligated to buy those shares at 550. So you need to have $55,000 to buy those 100 shares, correct?
Yes and no. But let's just say I'm going to answer it in two ways. Let's just say yes, okay? And now what? What are you getting at?
I was getting at basically you know, you didn't have to wait around to keep money like reserved to buy that $55,000 for 100 shares because we took the premium that we got from that put and reinvested it and made, let's say, 48K. Um,
47.
yeah, 47,000.
Between 31 to 47.
Yeah,
The 48K is income, but we're spending 17,000 to get the lower call, the 390 you pointed out.
right, right,
So you're
right.
gonna get between 31,000 and 47,000, depending on if Tesla goes between 390 and 550.
Yeah,
A lot of
yeah.
numbers. Do you get it?
I do. I'm gonna have to re-listen to the recording and go. I'm gonna have to go slower
to,
because
re- to re- go ahead.
it's just good. I don't want you to change anything. I'm just saying
To
it just
review, the 2-year Tesla naked put, which is it's a little bit aggressive because we're in the money. We're agreeing to buy them at a higher price,
yeah.
but we're getting money in our hand in pocket return for doing that. That's the thing up front. That's the value. Okay, we're getting more money. That's the value. So we reinvest that money, get between 31,000 and 47,000 profit over 2 years on the poor man's cover call, depending on how Tesla does. Okay,
Yeah.
and if we count that Tesla does end up being 550 or higher, we get 21,000 on the 2-year initial trade leap cover call, which is a 38% return. We're getting, let's just say, the full 47,000 because we're assuming Tesla is 550 in 2 years. 47,000 plus 21,000. Where are we at now? Add this together.
The 68.
$68,000 profit. I'm sorry, total return, not profit. $60,000 return. And then what is the value that we're getting 68,000 total return? What's the value that we're putting up to do the investment?
Um, that's 17 for the 390.
No, no. The initial investment was what?
21.
No, that was the initial premium. The initial investment before that to get there.
Oh, to buy our shares at 420 at 421.
No, we didn't buy any shares. We didn't buy one share. That's the thing. We didn't buy one share in this trade. What's the investment initially to that we talked about? The 2-year what?
The 2-year put, right?
Yes. What's the investment for that? What's the investment we
Uh,
counted?
well, I think the investment, well, there is you're getting paid to do that. So,
Yes, yes, but we have to have money. What investment do we count? I'll tell you if you're struggling.
yeah, I'm struggling. Tell me.
550, uh, Tesla 550. So investment technically is 55,000.
I see. Okay.
Okay.
Because it's a naked put, you have to have that money to buy those shares at 550 rather.
So actually we made a mistake. We were counting when I said the 38% return, were we counting 550 or
You
were we
did
counting?
210 divided by 550.
Okay, so then we did it. We did do it right. So we need to be able to take those shares at 550. So the initial investment's got to be 55,000. Okay,
Okay, let me write that in. Hold on.
right in. And then I'm gonna blow your mind after that. Watch what I do. If Tesla does maintain price and does go up to 550, we're getting 21,000 for the naked put. We're getting 47,000 for the performance cover call, which is 68,000.
Mhm.
And we divide 68,000 by the share price of 550, and what do we get? 68. You can go 680 if you want, which is per point, divided by 550.
123.636. So
123%. 0.6?
123.64, yeah.
123% return, okay, which is $68,000 from a $55,000 investment.
You could
Okay.
have just you could have just went home on that first trade and made 38%, but instead you reinvested it and actually made 123% trade.
Yes, now I'm gonna blow your mind. Do you know what the actual requirement for the 550 is?
Yeah, 50% probably.
Now you're thinking, because it's a naked put, let's just use the 50% because it's actually a little bit less because they're going to count the premium, etc. But because it's like a future trade,
Yeah,
if you had a cash covered put, that would be 55,000. But
correct.
because you got naked puts, did you not?
Right, because we have level 3.
Right, and because of that, they're only going to require about half the requirement.
Actually, quick side question before we move on. When you're doing this trade, Do you have to, as the do I specify whether I want this to be a naked put or a cash covered put, or it just assumes that it's a naked put when you're level three?
No, no, that would they're going to make it make it put.
Okay, that's what I thought. All right.
So what's happening is, yes, you have to come up with 55,000 to do the to buy the shares in 2 years at 55.50. But here's the thing: since you're in margin, they're going to do the trade at 27.5 anyways, which is half. Okay, and because you have naked puts level three, they're only going to hold. They're going to take out of your account and hold it as a maintenance. Write down maintenance. 27,500, which is half of the cost to buy those shares back. So in a sense, they're not going to take away 55,000 in buying power. They're going to take 27,000 in buying power, which is half, which is to say that you still have 27,000 in buying power to use for other trades. So the actual return is not based on 55. The actual return is based on only 27,000. So I'm showing you that 27,000 makes actually 68,000
Yeah.
because they're only going to take half the requirement anyways, not the full amount, unless you're in the cash cover puts, which you're not. You're in naked puts, which are high level. They're only going to take half the requirement, so technically, they're only using $27,000 of your account to create $68,000. So now, what's the real return?
So 28, 66. So
27,500. Is that half of 55? Did I do it right? 55,000 divided by two, which is 50%. Yeah, 27,500 cash dollars on
yeah,
hold to start this trade. Divided by, I'm sorry, $68,000 profit divided
divided
by
by 27,500.
27,500.
It's 247%.
247% return.
Damn.
Now, this is something I want to finish it off with this. Yes, you'd have to buy those shares at 550, but here's the trick, Eben. Now, can I tell you?
Okay.
You don't have to keep those shares. You can sell them right away. You can sell them the moment you get them assigned, you can sell them. The difference is that the important thing is that what is the share price currently? If the share price is 550, no one cares, okay? Or higher, it's going to expire worthless, but which is good for you. But if the shares are lower, that's where you got to calculate because now you're going to lose some share growth. If the shares were 400, then you're going to get the 68,000, but minus 150 in share growth because you're taking the shares higher while the share price is lower, which is a share growth loss.
Yeah.
If the share price is 500, not bad because you get the 680 points or the 68,000, which we already calculated. But now you have a 50-point share growth loss, minus 5,000.
Yeah, not bad.
But anywhere above 550, you get the full 68,000, 247% return. And counting that, even though you take the shares at 550, you can sell them right away. You don't have to hold on to them. You can sell them right away. The only big important thing is it at a loss or a gain or a wash? A loss is if the Tesla price is below 550. A gain is if it's above. A wash is if you just want to subtract, all this premium we got and then make that the share price. But the full gain is anything 550 or above. Make sense?
Mm.
Questions?
I'm still digesting this.
We took 27,500 and we got 68,000 on paper profit in
Yeah,
2 years.
nuts.
Now, is that worth $500 to you? Is that knowledge worth $500 to you?
Yes. Yeah, I'm gonna have to definitely same thing I did with the rich man's cover call. I'm gonna have to go through this line by line and just redo it, and so that way I can follow it perfectly. I get it mostly now, but yeah, I'm not confident that I can explain it perfectly back just yet. So I need a little
We did an example of a naked put leap 2 years out. Agreed to buy the shares, in this case higher in the money. In the money meaning Tesla's currently 421. We're agreeing to buy higher, which is technically in the money.
correct.
You got a lot of cash for it. We do kind of want the stock to go up in this case. We want it to go up, 130 points, which is probably not too hard to attain in 2 years, considering Elon, considering Tesla, considering the good market, considering Tesla is a pretty solid stock.
Right.
A more secure, safer trade would be to write the lower put, let's say at the money 420 or even lower 390, because then if we're going to take the stock at 390, you see how that's much safer than if you're going to take the stock at 550.
Yeah.
If we're going to take the stock at 390, isn't that much safer than agreeing to take the stock at 550? Because who knows what price it's going to be.
Yeah.
So let's look at the naked put for 390 for 2 years out. We know we're getting 21,000 for agreeing to take the stock at 550, but let's do the rich man's. That's actually a poor man's trade because that's risky. Let's do the rich man's trade. Let's take the stock at 390 in 2 years. How much are we getting?
390 call.
Put.
Okay, so 390 put. So we're gonna be selling this, correct? So we'll get a.
We're selling the put, which means we agree to take the stock at 390 in 2 years. I'm going to just show you the difference between 550 to 390. 390 more safe, yes?
Yeah.
550 less safe because we're taking the price higher, taking it higher. We're buying it higher.
Yeah. So the
What's the,
premium
what's
is
the what's the premium on the 390?
$100.70. We can just round it to 101 or just keep it at that. Whatever.
Let's say $100, right? So that's $10,000.
Yeah.
Yes, 100
Yeah.
points. So instead of getting 21,000 for your investment, now you're only getting 10,000 for your investment by doing a much lower put.
Yeah.
In this case, out of the money, because puts lower out of the money, puts higher in the money. So in 2 years, Tesla doesn't have to be 550. It only has to be 390, and we're good.
Yeah.
See how that's safer? But now we only get $10,000 advanced to us. See how that works?
Yeah.
Questions?
I will have some. I can't right now.
Let's look at the put. Can we look at the put on the monthly?
Um.
Someone they can put on the monthly. 33 days. Let's go January 24th. Let's sell the Tesla put. Let's look at the sweet spot. And this will conclude our naked puts session.
Okay. So monthly. Let's look at Jan 24th. Okay. So you're looking at what strike you want? 390 again?
We want the sweet spot. Now you have to do the work now. I'm just going to sit here and listen.
Okay. Okay. So 420 is where it's at. So let's go 5 points lower. 10, 15, 20, 25. So it's like 400 roughly is the sweet spot.
400 pays how much?
400 is paying us 22.10.
Close enough. So agree to sell the put. Sell the put at 400, which means we agree to take Tesla shares at 400. For that, we're going to get $2,200. Yes, and it's about a 21 point, 22 point share growth. Well, there's actually no share growth. That's the thing about naked puts. Since we don't have the shares, there's no share growth loss or gain unless it goes into the money. Then you become a share growth loss. So the put's a little different. There's no share growth. You know how we get, like stock goes up, we get share growth plus premium?
Yeah.
We don't get that in the naked put. We just get the premium. And that's really all we're looking to get is a premium. We do have a share growth loss if it goes into the money, which is below 400, which is going to be a share growth loss minus the premium. So ideally, you want Tesla to be above 400 next month. We're going to keep the $2,000, the $2,100, whatever it is. How much is it?
Yeah, it was 22.10, so 2,200.
$2,200. We keep that. Okay, 2,200. You did a good job at the sweet spot because what I call, listen, it's not a share growth. It's a buffer. Right down, buffer. The buffer is the current share price of Tesla to where you have to take the shares. I call that a buffer. Because all that distance, nothing really happens. We just keep our money and walk away. Make sense?
Yeah, and only have to buy it if it's 400 or lower.
Actually, actually below 400.
Only lower, right? Because if it expires right at 400,
It
it
needs to
didn't.
be 399.
Yeah,
I'm
yeah,
sorry,
yeah,
399.90.
yeah,
Yeah, because that 400 is actually worthless. It needs to be in the money.
yeah.
So let's do the ROI, can we? If we agree that this Tesla strike price is 400, we take the shares at 400, and we're getting $2,200 for that. What's the ROI for 1 month?
5.5.
2,200 divided by 400. 5 point.
Exactly
What,
5.5.
why does that not make sense? Oh, because we're doing okay. So we're mixing up the price with the dollars. Let me do that again. 22 divided by 400. That's the correct number. 5.5% return. 5.5% return. Okay. Which is $2,200. Okay. How much is that after a year if you do 10 naked puts at 5.5% return? How much is it after a year return?
55.
Correct. Now let's use the actual math since this naked put the only maintenance requirement is going to be just half. So what's the real return on the naked put? Considering, yes, we'll buy the shares at 400, but we can sell them right away, and they're only going to take out of our account buying power for half. So what's the actual return going to be percentage-wise a month and a
So
year?
actually the 400 will cost us 40. So we'll actually be only holding accountable to 20. So it's going to be
Just
actually
double the percentage. That's all I have to do, right? Because if you're halving the requirement, you double the percentage return. So instead of 5.5 a month and 55 a year, what is it going to be?
going to be 11.
11 per month, and how much per year?
110.
You can literally get 100% return on your money on naked puts in a year on the Tesla trade as long as the Tesla pretty much maintains price.
Yeah.
And you can go down a little bit as long as it doesn't go down beyond your buffer. Because
Yeah.
remember, we sell if the shares are 420 and we sell at 400, nothing happens between 20 and 400. Between 420 and 400, nothing happens as long as it doesn't go into the 400. Then we start losing money. At least we lose our premium. All right, but if we're getting 22 points in premium, if we get 22 points in premium, what's the actual break even on the Tesla they can put for the month? If we sell a 400 put, we really take it at 400, we get 22 points of premium. What's the actual break even price?
378.
Huh?
378.
Yes. At 378, it's a wash. Below that, it's going to be a loss because now we're losing between 378 and 400 price, which is our naked put agreement. Subtract our premiums, $22, 2200, and then it's starting to go into a loss.
Yeah.
That's why it's better to do the naked put 390 in 2 years than 550. But 550 is better if it does end up going up, which it seems to be going up right now.
A lot to digest. This is
Questions? I'm glad we got here at session 8 with the naked puts.
seven.
See, I'm trying to advance you forward. Session 7
Don't be
and the
trying to
naked
skip
puts
sessions on me,
because
man.
8, 9, 10, 11, 12. We have 4 more. Counting this one, we have 4 more. We discussed naked puts. We discussed specialized knowledge. What is specialized knowledge?
The stuff that you get to not learn in school or anywhere else, really. No seminars. You have to talk to Big G over here. You learn it
Big
from your
G
book.
and the
And the
Rainmaker. What's up? What's up,
Rainmaker.
Rainmaker? You're
Yeah.
the Rainmaker, man.
Let's go. Making it rain out here, guys.
There was a there was a movie, yeah, just like that, just like putting up the cast. There was a movie, Bruce Willis. It was about time travel, and they called the guy. I think they called the guy the
Looper.
Rainmaker.
You're talking about Looper. I think Loop.
Yeah, Looper. Which makes me think about quantum computers. You know how the quantum is like,
The bits.
but in
Bits that
Looper,
keep position.
the point there was this guy called the Rainmaker, I think,
Yeah,
that
I
if,
think you're right.
and he was the kid that made stuff happen. Most people can only telekinesis a little quarter with their mind, but the Rainmaker can do much more. If
Yeah.
I get it right, maybe I got it wrong, but that's what I remember.
Yeah,
Uh,
I'll have to definitely go through this and then I'll have questions for you. I just gotta.
IONQ and Tesla both broke new highs last week,
Yeah,
all-time highs.
yeah.
IONQ is doing great. You see how that market came back?
What do you suspect is gonna happen tomorrow?
Uh, we'll probably go
We're
higher, and at some point we're going to dip again
off.
drastically.
We're the market's closed on Christmas, so it's gonna be a short week.
And I hope, because it's a Christmas week, there's going to be a lot of buying. We won't have any major dips in probably till next year, I hope. Which is to say that I think the market will probably maintain. But you want to have those, in case there's a fire, you want to have those puts. You see those puts go up and then retract?
Yeah, they came down obviously, but yeah.
I don't want you to trade yet, but you could have sold those puts at a profit,
I know. Yeah,
bought it back when it swung up. But again, we don't have the luxury of of foresight.
we have hindsight.
We have hindsight.
Yeah, yeah.
We don't have a crystal ball, so we have to use our intuition, use our best judgment.
So this week I got several positions expiring. I got two covered calls in Mara expiring Friday, two covered calls in Rocket Lab expiring Friday, and I got one covered call in SMCI expiring Friday.
Ideally, let them go, let them assign, or let them go, and then get your cash if there's cash left, and do the next trade for the next month.
So in this case, when I do get this cash, immediately the broker is going to apply that towards the margin, right, to bring that down.
Now, see, that's not actually correct.
So what are they going to do with it?
Yes, it applies to margin, but that happens anyways. It doesn't affect your account balance.
No, no, I know. I was just trying to clarify that, but yeah, I see
Um,
it.
when
Like,
it applies to margin, you still get all the profit on your trades. You
you
still get
still get buying power go up.
all these numbers we're doing are still correct.
Correct. Yeah, and your
It
buying
doesn't
power
mean they're
wouldn't.
taking away any of your. They're not taking away $1 of your profit.
They're not taking away your buying power either.
Right. When you have a 100K account and you buy 100K in stock, you have 20K margin in a sense debt, but we like to say profitable debt. Correct.
Correct.
So when we do a trade, yes, that's getting point put to the margin. But if you buy another shares, IONQ or Tesla, you use the margin back again. It doesn't matter. Only thing that matters about the margin is that you stay ideally above 66% cash and 33% margin. Ideally, you stay above that. 100% cash is kind of best, but I like to dip in margin when I need to get that extra trade to get that extra value. But you don't have to.
You want to know something? You want
I
to know
know you
something?
dipped in the. I know you dipped in the margin recently. Yes, go ahead.
But when we first spoke about margin, I was like about that 33%, right? At the end of the week, because now the numbers have updated, looks like I'm only in 25% margin. It actually came down.
Probably because the stocks went up.
The stocks went up. We sold that. I think it was what is it? Ion Q. One of them. We sold a Leap. Uh, we bought back. No, yeah, it was Ion Q. Correct. Yeah, it was Ion Q. We sold a 2027 Leap, and that paid us some. So that definitely helped. Yeah, so it's actually kind of cool to see the numbers change like that so fast.
So you still have a net liquid that ideally is still going up, correct? Net liquid total account value is ideally still going up. Yes.
Yeah, I think so. It looks like
It
it.
doesn't matter really that your trades are being applied to margin. That's just how the account balances itself. You're still getting these returns. In this case, 68,000 on a Tesla scenario, 247% return, considering they're only using half of the naked put. And even if you don't want to use that extra money, even if you want to do a cash covered put where you set the whole 55,000 aside, you're still getting half that return, which is 123%, which is our first data number we got, 123%. We turned that into 247% only because we're using half of our buying power, not the full amount, because of level 3 naked puts versus level 2 cash covered puts. So we're still getting all that profit, all that return, regardless if anything gets applied to margin. It's really not the same thing.
Yeah,
Is that enough for today?
I'm good with it. Um,
Uh, it's Monday. Do you want to do that a little before Christmas, or you want to wait till after Christmas? We're going to be trading tomorrow. You can text me if you want. Um,
I'll text you tomorrow. I have to go tomorrow to my parents' house, but depending on what time that is, I can probably sneak in a session with you.
all right, man. Looks
Yeah.
good. Sounds good. I'll send you the recording.
Yeah.
Do your homework and get questions from me. Oh, I'm sorry. I didn't cover your questions. Let me work on your questions, okay?
Yeah, that's fine. Um, Perfect. They were just high level general questions. I don't think there's anything
These are real general. What are the most common mistakes?
what
Common
are,
mistakes are one is freezing and don't not trading because you're afraid. You freeze.
yeah,
Okay. Two, selling all your shit, losing your shit when the market drops 1,000 points and selling everything,
yeah,
and then missing out when it comes back up, which is you'll have a loss then because you sold when it was down
yeah,
and you missed the upside back up. That's another common mistake. The other common mistake is to overtrade and to go too much in the margin and to have more of a loss when the market comes down. Those are three common mistakes: freezing, selling, getting scared out of the market and running to mommy, and overtrading it, going too much in the margin and going too rambunctious, and then end up losing when the market dips. Getting a margin call, for example. If I own Q and Tesla drop 100, well, let's say they drop 30, 40%, then you're going to be in a margin call if you have too much margin,
yeah,
and then you might have to sell or put up money, which means meeting a margin call. But as long as you're at 33% or less, you'll be fine.
right.
I'll take the other questions next session.
Yeah, I think we
You
got more.
are you are on fast track. You are definitely one of my better pupils. You are on fast track. Learning process results.
Sweet. Yeah, I'm
Apply the
looking.
trades.
Yeah, that's the thing is I'm not fully confident on when to apply my vertical spread versus just the covered call. Should I do a
We're
put?
giving you all the tools in the shed. You have to decide what tool to use.
And I want to get. I'm not there yet where I know which tool to use besides the covered calls, which I think that one I've gotten. But
Yes.
all these other spreads, I haven't really gotten to okay, I see a situation. This is a good time to sell this one instead of this one. I'm not there yet. I don't think.
However, you know what a dividend stock looks like, correct?
Yeah.
That's a tool, dividends. You know what a covered call stock looks like, correct?
Yeah.
It's a covered call. See, so, and you know how to do a poor man's covered call, yes?
Yeah.
These are your tools. And
Yeah.
you
Yeah.
understand the concept of a 2 year call versus a 1 month call. These are tools. You're doing good.
Sweet. Uh,
Let's end on a positive note.
yeah.
Thank you, sir.
Thank you.
If I don't hear from you, Merry Christmas
Thank you. So you too.
and Happy New Year.
Okay.
God, your gout.